Thank you, Madam Chair. My questions are for Monsieur Martin. For ordinary Canadians, tax rules are, of course, clear and strict and enforced, and oftentimes there are audits that are done. But for multinational corporations, with offshore subsidies, they have the option of using offshore tax havens, which you spoke about them being obviously complicated structures that are costly to put in place, so naturally wouldn't be available for ordinary Canadians or even small businesses in the mid-market space in our economy. On that basis, do you believe that Canada's current tax system treats all taxpayers equally?
Non, mais le système.
The system treats everyone equally, but the question is, can everyone use the system in the same way? And that's clearly not the case. There are companies that are able to pay for accountants and audit services that allow them to manipulate the text. And so, in that way, not everyone is on an equal footing before the law. There are many reasons for that, and Professor Loomer discussed them. Perhaps it's the way that we use the legislation that offers some companies opportunities and not others.
You spoke also about tax avoidance being highly concentrated amongst a few select entities and the impacts of that on our local economy. Can you expand on that?
Oui, donc il y a deux dimensions.
So, if you look at tax avoidance, which is tied to the use of tax havens, that is extremely concentrated in the hands of a few very large multinationals. It's low in most companies. That's the first thing I would say. The second dimension is that if you give a competitive advantage to these very large multinationals because they can conduct tax avoidance and pay less tax than others, well, what you'll do is that you will strengthen the dominance of those multinationals, and they will become even bigger because they are avoiding paying taxes. They will become larger than they were before. You will increase their economic concentration in the economy. And in some sectors, that's been the case in the United States. And I'll refer to the study that I mentioned in my documents.
Thank you for that. Yeah, of course, it's not just about the lost revenue for Canada, but also the impact of competition and the distortion of that competition that you mentioned, which is why it has been very difficult to see the Prime Minister's abuse of the use of offshore tax havens when he was at Brookfield. You also talked about the lack of data publication and what that means. What are your thoughts on that?
I think that Canada and Statistics Canada has a policy on companies. If you look at overseas data that was mentioned earlier, there is foreign direct investment, but it goes to tax havens, and that data is not made public. And I try to get them, and it's just aggregated data among a number of countries, and that sends a signal that the administration has a hard time providing this type of information. Once again, this data is collected through the CBCA, but legislators need to ensure that this data is published, is made public. We need policy in order to do that.
So with that, of course, there is no transparency for Canadians in these aggressive tax avoiders that would be helpful when even just making legislation to be able to address that issue. So what level
Sorry,
of...
Ms. Kobina, that's time for you.
No
okay, so
Thank
thank
you.
you very much. Thank you.
Thank you. And Mr. Loomer, I'm going to stay with you. And in your opening remarks, you spoke of the different investment destinations and the countries of origin for Canadian investment, and a chart was circulated. I want to just make sure this is included in the record, though. So, if I understand this correctly, the amount of money that Canadians invest in the United States in 2024, the total of investments from Canada to the United States is $1.3 billion. In reverse, American investment in Canada is $683 billion. Is that correct?
On the outbound, it's 1.3 trillion. So 1,289 billion, and on the inbound side, 683. So yes, we are a net capital exporter by a large margin.
Huge margin. It was $606 billion. That's the net amount that we are exporting to the American economy. Is that correct?
That's right.
Wow. That's actually a lot worse than the next most recent numbers that I had been aware of. Although it would seem to be accelerating in that the net investment deficit since the Prime Minister, beginning at the beginning of the fiscal year, which is roughly when the Prime Minister was sworn in, is another $50 billion. Perhaps I won't get you to comment on that. I'll just go to... in fact, I want to go now to Professor Martin and pick up where Ms. Kobina left off around legislated solutions and data deficiencies in Canada. There have been repeated attempts in Parliament to compel the CRA to actually give information to the Parliamentary Budget Officer so that the Parliamentary Budget Officer can independently measure the tax gap in Canada. Are you aware of Senator Percy Down has been the champion of this. Are you aware of his work?
Non, je suis pas au courant.
So,
No, I'm not aware of that.
had proposed, and this was even moved in the House of Commons in the 42nd Parliament, was that anonymized tax data requested by the PBO be released to the PBO so he could independently verify the tax gap. Would that be helpful for legislators and policymakers if we could actually measure the tax gap in Canada?
Oui, tout à fait. Je pense qu'une manière de...
I think that one way to find a consensus is to say that for very large multinationals, these data will be published in Australia and the EU in any case, so we could ask for the same thing in Canada. What becomes more complicated is doing that for all companies, but as I explained at the beginning, tax avoidance tied to tax havens is carried out mostly by the very large multinationals. Perhaps instead of focusing on all companies, you could just focus on the very large multinationals who are doing it.
When it comes to the very large companies, the Auditor General reported as far back as 2018 that if a company has an offshore bank account or offshore dealings, that they would be given months or even years to comply with orders from the Canada Revenue Agency, whereas a normal Canadian with only domestic dealings, whether it's a corporate filer or a personal filer, must comply within 30 days or automatically have the taxes assessed if they don't comply. Is that a fair system where an offshore filer is given months or years or even just have the taxes struck when a normal small business, say, tax filer in Canada, will automatically have their taxes assessed if they can't comply with the CRA within 30 days?
Encore une fois, je pense que regarder...
Once again, I think if you look internationally, it's interesting if we could try to have the same type of requests of these multinationals as what is done in Australia and the EU, that would be good. And if we were able to ask for that information from the large multinationals, there's no reason, if they can do that in the EU, there's no reason why we couldn't do that here as well.
Okay, thank you, Mr. Kelly.
From the Conservatives, thank you, Madam Chair, and I salute my colleagues from a variety of ridings, and hello to the witnesses, and thank you for joining us today. My first question is for Professor Loomer. In your speech, you said that the issue is the legislation itself, and that the legislation should be aligned with policy. Can you explain that further, please?
Sure. Thank you for the question. When I say that, I do not have the authority to decide what the policy is. I've looked at these rules a long time, and I will say that the policy has a push and pull to it. And so we have a long-standing rules that allow multinationals to have their dividends come back to Canada exempt from corporate tax. And there are ways that they can minimize their corporate tax elsewhere. So that's a source of a lot of the profit shifting that comes into Canada. But when governments, both Liberal and Conservative, have tried to enact rules that will stem that practice, those rules don't get enacted. Various reasons: lobbying, pressure from the law and accounting firms on the advice of their clients. But there's a balancing to do to decide, well, do these rules that allow an exemption from corporate tax on dividends coming back to Canada, do they provide a net benefit to us? Is there a net economic benefit? And I think in the 70s, the belief was, yes, we're a net capital importing country. We need this to compete with the US, and Germany, and Japan. Do we need that in 2025? It's not clear to me that we do. It's not clear to me that the policy makes sense, for example, to allow interest deductions in Canada or scientific research credits in Canada to fund offshore investment that then results in income that's brought back to Canada with no tax. You get a deduction here, and when the income comes back, you have no inclusion. Maybe that makes sense from a competitiveness point of view, but it requires serious consideration whether that's the right call.
Merci beaucoup.
Thank you very much. Along the same lines, the Prime Minister tried to defend the use of tax havens by Brookfield, and he said that the use of tax havens was a means of guaranteeing tax payment in Canada. Do you agree with that statement by the Prime Minister?
This question is to me? Yes. Thank you. Brookfield and, if you look at other large Canadian multinationals, the largest one, the financial services companies, Brookfield, Manulife, Sun Life, the big banks, RBC, the big energy companies, Enbridge, I would expect that all of them have some tax haven use. Barbados was the traditional choice. It's shifted more and more to Bermuda because 0% is better than 2.5%, and the flight from Toronto is shorter. I expect there's a lot of that in the large Canadian multinationals. It is a normal practice. And as I said, our rules have facilitated and indeed, I would say, encouraged that. So the Prime Minister is right when he says that. Does it result in some net benefit to us? You would say it's a complicated question because you would say that, well, it's good for everyone who has an interest in the Canada Pension Plan because Brookfield invests the money and makes better profits because there's less tax paid and perhaps results in more income tax back here eventually when people are withdrawing their pensions. But it's a difficult balancing.
Merci beaucoup. Ma prochaine question.
Thank you very much. My next question is for Mr. Menzer. I'll ask you the same question. Mr. Cochrane, the senior economist, said that the statement by the Prime Minister was laughable, that taxes were paid in Canada using tax havens. What do you think about that?
I'm afraid that I'm not very familiar with the Brookfield case to be able to make an informed statement about this. Usually, I would tend to argue that lowering taxes here in order to gain more revenue is a bad idea, and also enticing the use of tax havens with the aim of increasing revenues here is in the same category for me, not convincing policy. Usually one would expect that the Laffer curve, the long-held belief coined in the Reagan era, that when you are lowering your taxes, then more investment will come, and in the end you will end up with more revenue. It's just a myth and has not been proven to hold true anywhere in the world. The empirical evidence is firmly to the contrary. So when you lower taxes, when you shift profits to lower taxed jurisdictions, the end result will never be increased tax revenue, at least ceteris paribus. It might coincide with another growth effect that it would have happened anyway, and you would have ended up with even higher taxes hadn't you not reduced your tax rates beforehand. This much I can say to this case. Thank you.
Il me reste encore. Pardon?
Do I have time left? 15 seconds. Oh, well. Thank you to the witnesses for joining us today.